So I sit here. So you are all very seasoned investors. And let me start with my first question to you, Rishika, because I read on the website that you are an unwavering dreamer and chasing what can be. Correct?
Absolutely.
So when we talk about pet tech, pet food, pet care, from your perspective, how would you describe the current environment and landscape here in Asia, Oceania, and what attracts you to it? And I will also pass this question to each one of you because I'm interested to get your different perspectives. But I start with Rishika.
Perfect. Thank you. No, I think it's like Athena said when she sort of came on stage, which is that the space in Asia is very nascent, but I think it's coming of age, and there are a few sort of factors that are driving some of this underlying growth, right? At least from our perspective, the sort of two biggest trends that we're seeing in Asia. One is, as you're all probably aware, reducing fertility rates, and that is coming off a cliff very aggressively. So if we take India as an example, in call it the 1990s, the average size of of a household was 4 people to a household, and that's down to about 3. So I think that is one big trend. Now, reduced fertility is a function of obviously higher education, more women coming into the workforce, choosing not to get married, opting for alternative companionship, and that's where pets come into the ecosystem, right? And this is something that we've seen already in the West, which is a much more developed market, and it's sort of now starting to come of age in Asia. The other big trend, of course, which is very Asia specific, is just how fast these countries are growing. And so you've got so much disposable incomes in the hands of people. You've got what we call DINKs, which is double income, no kids. And so you've got the ability and the willingness to spend. You have a desire for companionship, and that's why pets become very, very relevant. But I think when you sort of look at the opportunity, and then when you compare it to who has leveraged and what has really come out of this opportunity, I think that's where the nascency starts to come in. Different countries have very different ideologies around how they look after their pets. For example, in India, almost 85-90% households prefer giving their pets home food. So what I eat is what I will give my pet, because there is this assumption that that's the best service I am doing. And however, it may not be best for the nutrition, because the nutrition a pet requires versus what we require are very different. And so I think for us, it's about identifying what are these pockets based on these trends, what is the current market dynamic, and how fast is the consumer going to change their mindset. And so therefore, how quickly can we capitalize on some of these opportunities? So I think that is how we sort of look at pets. And of course, we can go into all the various subsegments of pet care eventually, but I think that's the thesis that we're going after.
And when we talked briefly before the event started, you said the dynamics, it's accelerating. So what are you seeing?
Definitely. I think it's just the number of startups in this room today, right? 3 years ago, I don't think we would have seen so many companies or so many great founders trying to create or leverage on this opportunity. So I think we're seeing customers becoming open to spending on their pets, number one. Number two, we're seeing founders try to capitalize on that opportunity. And I think now it's just a matter of time when the two come together and you can really build escape velocity.
Good. Samer, what's your perspective? You are invested in, or there are investments in pet tech already. So what's your perspective on this category in this region?
I think you have to, so nothing Rishika said I disagree with, but I have maybe a slight difference of opinion about staging and sequencing, right? So I'll limit my comments today to Southeast Asia, which is the market that I track carefully. We know a little bit about India because we do a lot of work in India. So I don't pretend to know anything about the rest of the region, so please take my comments with that narrow lens in mind. Singapore has $85,000, $90,000 per capita income. It looks and feels like any city you can think of in some respects. So yes, what you can see in Singapore may mimic what you might see in any more developed pet market in the world. But keep in mind, our region has 2 billion people, of which less than 5% make more than $40,000 a year. Yeah? So go back to basics on how people treat themselves, right? So if you believe that pets are increasingly viewed as family members, and you treat your family members the way you would treat yourself, how do you poorer people treat themselves? The first thing they do is improve nutrition across the world, universal truth. Yeah? 90% of the trade in our region is food. Okay? So start there first, is what I would say. The number of wearable companies, collar companies, extreme precision healthcare companies that come and talk to us, and we're like, I get it, but not in our markets, not yet, right? So I think, and again, there's a distinction between what an investor needs to see. We're venture investors, the three of us, right? When we win, we need to win big because a lot of times we're going to lose. What you might want to do as a founder could be very different. You might never have to take a venture dollar, right? So I think you have to also choose how you want to build out your business. But long-term, super bullish. And I'll leave you with a thought, right? We care a lot about human behaviors, what is static and what will evolve. Loneliness is undefeated. So this human instinct of not wanting to be lonely is undefeated. You can look any data you want, any statistic you want, any study you want, time immemorial. If we stop having children, and as a society, we have largely chosen now to stop having children. Korea, Japan, 1 out of 3 people that exist today will not exist in 40 years. Think about that. What are people going to do? So I'm very bullish on pets, but I'm a bit more skeptical that the models from the West are going to apply in our region, my region, anytime soon. And you have to start first with better nutrition. Let's do that first, and then we can worry about all the stuff that sits on top of that stack in due course.
Yeah. No, I can only echo what you said about India, because when I was there a few months ago, we did home immersion. So we went to people's home, we talked to mothers, we wanted to see how they live with the dogs around, what happens, and we talked about the home cooking. And when you come to the nutrition piece, it was like, when I asked the question, and how do you make sure that the nutritional piece is covered for the dog? It's like, hello, I'm the mother, I raised my kids, so I just know. Yeah? It's a factual thing. I just know. Yeah? And we all know that when you have a startup, you have to find a pain point that you can address and then find a solution. So sometimes there isn't even a pain point. In the older generation, the younger generation is changing because they are asking the question they have. So that's where I think the change will come. Don't teach an old dog new tricks, I would say. It's going to be very difficult. But with the younger digital savvy community and population, it will happen faster. Hubert, from your perspective, I understand you are also nascent, is it fair to say, to the pet tech, pet care category. So what are your thoughts and how do you look at this category from your perspective?
Yeah. So before I jump into that, we are investor in ZoomVet. So just with that context, we've been an investor for about 5 years now from the very beginning. And maybe before I go more into detail, I'll tell you why we invested. So I think we can share a little bit more about how our views on pet market has evolved in the last 5 years. So before I even got into pets, so as a VC, we invest a lot in sustainability, healthcare, and also intellectual property and content. And I'm from South Korea, so we've seen a massive rise in terms of spending on kids. So I'm an investor in a company called Ping Fong Baby Shark, which we have the most number of views, now 110 billion views. Feature sharks. I don't know if it's a pet category, I'm not yet, but I realize there's a massive problem because as 2 panelists have said, the fertility rate, the birth rate is going down massively. So I'm thinking, oh, my target audience is disappearing very quickly. Although we have captured the audience around the world, what do we do now as an investor? So I looked at the adjacent category, which is the pet category, which was growing at double digit in South Korea. So I realized when I moved to Singapore in 2018, I immediately started looking for all the pet startups I could find. Because in Korea, this has become a huge industry. How can I replicate the success here in Southeast Asia because I felt I was a little late to the game in Korea already back then. So hence I invest in ZoomVet. So today I'll talk a little bit more about the comparison between South Korean market and Southeast Asia because these are the two markets that I observe a lot. Now I think we have some problems in Korea because even for my younger sister and many of the pet owners, I feel like we're spending way too much on pets. They're eating better than me, they're wearing better stuff than me, spending too much on their education. We literally have pet kindergartens, we have vans that come pick them up and then go through all these trainings. So the wallet spend on the pet has gotten to a point where I don't know if it's sustainable anymore, but it is obviously maybe a very good thing for Purinas of the world. So will that translate to Southeast Asia? I'm not sure. How long will it take, in what shape or form, I'm not sure. So I'm very excited to observe if that level of income spent on pet category will come down here. And of course, Singapore is also very different from neighboring countries, right? Malaysia, Thailand, Indonesia, we've looked into a lot of it. So so that's where I am. Korea, super developed in the last 5 to 10 years. Can it go up? I'm not sure. Southeast Asia, I think there's a lot of potential, but it hasn't really happened yet to the extent I feel and experience in South Korea.
Yeah, and just to mention that last year, I think it's true that in South Korea they sold more strollers for pets than for babies. And it's amazing to see. It's a very mature market, and where it can go, and then can it go any further, or is that really then the borderline to crazy a bit sometimes? But anyway, that's the beauty of our category. Lots of emotions and relationships, and this human pet bond element that makes it attractive for manufacturers, for investors, and of course for people. Yeah. So, Samir, you mentioned Southeast Asia. Yeah. When you look at the hotspots in this region, why Southeast Asia and not somewhere else from your perspective?
I mean, pet penetration is still quite low, right? So there's just a lot of catch-up. So I'm very simplistic, right? FMCG stuff. What's the penetration rates? What's the wallet spend? What's the fragmentation? What are the education levels today versus where they might be 10, 20 years from now? Not super complex, right? We have a lot of catch-up to do in our region, whether it's Malaysia, whether it's Vietnam, whether it's Indonesia, whether it's the Philippines. Thailand is a bit further ahead, but Thailand has different problems, right? $8,000 per capita, heavy pet ownership, relatively speaking, for income levels, a lot of spend already, but shrinking society, right? And something that's grown 2% for the last 20 years. So not the level of disposable income growth you would like to see. Singapore is a bit of a different beast. Income is there. Space for dogs, more questionable given how stuff is set up here. But again, small market, right? So ultimately 6 million people is 6 million people. It's very hard to build a large consumables business. I think healthcare, vet, a bit more interesting, and I'm sure ZoomVet will have its perspective on that. So we think a lot about cats versus dogs. So Philippines, dog country. Indonesia has 7 times more cats than dogs. So if you believe that they're going to catch up, and it was very interesting, I was talking to a gentleman from Dubai about how things are changing there and dogs are becoming more acceptable. Interesting. Will that happen in Indo? I don't know. I don't see it yet. So we think about all those things. What I'm most excited about is actually from a business building, because of the moats it creates, is who's going to create a really interesting vet chain in one of these markets. There's not actually a single one, which is shocking, right? Our friends at Nestle, our friends at Mars keep telling us, if you build one, we will buy it off of you. So we're looking for people to build
Careful,
vets.
spoiler.
Right. But, I mean, there are also some really big stumbling blocks there, right? Vets in our region are a low status, low prestige job, right? They are. We've talked to vets and like, why aren't there more of you? Like, well, I love pets hopelessly. That's why I'm in this trade, but it's not because people respect me, people give me status, and I get paid very well yet. That might change. So again, I'm thinking a lot about nutrition, and I'm thinking a lot about health, because I think that's what human beings did with their babies. Better health, better nutrition. I see no reason why that will change. all the other fancy stuff, furniture and wearables and blah, 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 will happen. But I don't think we're going to be where South Korea is anytime soon. So I choose to behave accordingly. Right?
Rishika, over to you. Building on what Samer said in terms of topics within the category, what do you see and what's your view on the hotspots in the region?
Yeah, I think. Yeah, for us, we cover both Southeast Asia and India, but I think on this panel we've got enough Southeast Asia coverage, so maybe I can sort of emphasize on India. It's interesting because India, believe it or not, has 30 million pets. So it's not a small market by any order of magnitude. But those $30 million pets, when you actually translate that into market size today, it's barely about $1 billion. And the reason for that is, like I mentioned, right, which is in India, nutrition, the best nutrition is still considered what you eat. I'm giving the same quality of food that I eat to my pet. And I completely agree with Samir that in our view as well, that is low-hanging fruit. Because like you said, don't teach an old dog new tricks, but the sort of new generation of people that are coming into the sort of working force with great incomes are starting to ask questions built on high awareness, which is to say, hey, maybe this is not good for my pet. Maybe my dog needs more protein. Maybe my dog needs less carbs, and maybe my diet is different because I am a vegetarian, especially in the context of India, right? So definitely believe that creating that awareness, trying to educate the customer on why your nutrition is not necessarily as beneficial to your pet and that they need something different is important. The other thing I also agree is health. Once again, in the context of India, you have 1 vet to 5,000 pets. I mean, that is abysmal. That is incredibly low. If you have an emergency for your pet, what do? I mean, you won't have a hospital nearby. You won't have a tertiary clinic that's open till late, and pets can't communicate with you the way a human being can. They can't tell you what the discomfort is, and so you can't self-treat at home. I can't just pop a Panadol into their mouths and hope that it cures itself, right? So we think that these are two really, really big, obvious categories, and it's not that there is no demand, it's just that there has to be a little more awareness that needs to be built. And so we always urge companies and startups to try and see how they can build that awareness. Also, because we think that once a customer has built loyalty with a certain brand in the pet care space, the switching cost is very high. If I feed my pet a certain brand of food, I am not going to change it because it's not good for them and it's a low involvement category as far as I'm concerned as a pet parent. And so you want to be that first port of call or the first one to get into the customer's mindset, because once you do, they will not switch unless you disappoint them. So I think these are the same two categories that we also focus on in India and sort of how we go about building the category.
Okay, Hubert, your perspective with the verticals that are of interest and relevance for you?
Yeah, so vet market, of course, that's why I invest in Zoom Vet. I think there's a tremendous opportunity around scale, not as in like huge hospitals, but maybe through consistent quality branding, maybe digitization of clinics around the region. I think it's exciting, but it's not easy because we just don't have that many quality vets coming out of schools around here, and for all the things that Samir said, the retention is very low. So how can we fix that problem? I think we have some ideas. Whereas in opposite, I'll continue to talk a little bit more about Korea because I want to keep things interesting. We have a lot of vets in Korea. So Athena and Grace, we're riding our car in Seoul, and we were literally counting how many vets clinics there were, and in Gangnam, which is the south of Seoul, there is just like 1 vet clinic per block, I think, and there's a high concentration of vets. So literally, we can just walk down to any vet clinic, and we have a lot of 24-hour vet clinics. So we said, okay, telehealth, probably teleconsult may not work here. Also, it's not allowed illegally in South Korea, whereas in Southeast Asia it's allowed, and the regulators welcome it here. So yeah, there's difference in those markets. I want to go back to your stroller story because I live here, but I go to Korea a lot. We have a lot of clients there. And also, there was one time, I'll tell you a funny story. I walked out of the house and saw this lady was pushing the stroller with her dog inside. And literally 30 seconds later, I saw another lady pushing the strollers. I was like, am I going crazy? Like, am I hallucinating? And then there was another lady right at the back going all in the same direction. I was like, oh my God, I think maybe time has come where humans are working for the pets. We're the one doing all the chores and moving, moving them. But also it was interesting because I wanted to ask my younger sister who has 2 dogs, why are these people doing this? You know, why are the dogs not working? We're the one walking and pushing them. And she said, one, it could be that, of course, they're big dogs. You have to go wash them carefully, because we all live in apartment, which is like the condo equivalent in Singapore. So it's a lot of work too. Also in South Korea, because we have a lot of older dogs that are aging. So as they eat better, we take care of them better. Just like humans, they tend to live longer, 10 years, 13 years, 14 years, so they don't have good knees. So then I understand, okay, this is an interesting phenomenon, and we start to understand how can we build the services and products around this particular demographic change, even within the pet category. So I think that's very interesting. The vets in Korea are like celebrities now. They're on TVs. They're like super influencers.
Let's move some of them to Southeast Asia.
Yeah,
we love all
so-
things Korean anyway.
So yeah, it's just like complete opposite. Yeah, they're making a lot more money than the actors and actresses, singers. So and they're launching brands. So they're also very entrepreneurial. When they have the brand status, then they can literally have huge distribution. So very interesting market. Hasn't come to Southeast Asia yet, but I think it will come at some point.
Good. Let's change topic. Yeah. As investors, and I start with you, Samir. On your website, the profile says apparently you roll up your sleeves and you get into the details. So, when we talk about startup founders and teams, what sort of characteristics are you looking for in a team that makes you confident that's not just a great idea, but also a team that can execute?
Yeah, I think it's important to frame sort of when we come in as investors at DSG, because what we do is a bit different than what Venturi does in terms of stage, right? We've invested now 90 times. Our 90th check goes out next week. In 23 of those cases, the business had 0 revenue. Yeah? So all you're doing at that stage is you have an idea, to your point. You have a hypothesis about where the future will be, what will look like. But most importantly, you're looking at Hubert and saying there's something special about Hubert, right? And not only is it there's something special today, it's going to be even more special 5 to 10 years from now. That's the assessment you have to make. Because all the business plans, all the PowerPoint slides, all the Excel, it's this. No? There's nothing there. So we spend a lot of time trying to work out as best as we can, and it's imperfect. We will get it wrong reasonably often, on whether this is someone we can see working with for the next 10 to 15 years. I call it the Indian marriage. You cannot get out, right? There's no exit path, right? So you have to be there for long term. We're going to be on your cap table. Deepak is still on a cap table 25 years later, right? He's still a board member at one of his companies. That's insane, right? And that means you need to be able to see eye to eye this person. You need to view them as being coachable without being a wallflower where they will just bend wherever you tell them to bend. They have a point of view, but they're willing to be coached. And we think in consumer is really hard. All businesses are hard, don't get me wrong. But consumer takes a very particular kind of persistence and passion, we think. And if you're not interested in the category, like we look at pure mercenaries and we say, we don't want to work with you. Because the arbitrage will not last for very long and you will get distracted. So for pets, for example, if you're not a pet owner, if you're not interested in pets, if you're not obsessed with pets, right? And why? And we have one of my colleagues, Anthony, he has 3 dogs, no children, the future. right? He spends more money on his dog than I spend on my children absent education. I kid you not, we've done the math. If you can't convince him that you're passionate about pets, we're not going to meet you, quite frankly, because that's the level of obsession I think you need.
Hubert, you? What would you be looking for? Yeah.
You know, pet startup.
Yep.
Wow. So a lot of pet startups have started, of course, in this part of the region as well as in Korea, I see. But it's an incredible, despite all the great things we said on the stage here, it's incredibly competitive business, thin margin business, depending on which category we're talking about here for the food, supplements, very, very, very razor thin margin, very hard to get the distribution. And even for the healthcare, the vets, there's a lot of regulation in Korea. Here, maybe not enough regulation, but also just the sheer supply of good quality vets is very lacking. But at the same time, also, I think the pet owners' general understanding and knowledge may be also lacking as well, because they're maybe the first-time owners since COVID. So there's a lot of sort of steep learning curve that has to happen at the same time. So how as a founder in pet startup, we may also be a first-time pet startup founder. How do you work around these changes? I guess that's the key thing. For us, for this particular category, we want to find startups that are highly profitable rather than really going for the 2x, 3x growth, especially in this environment. I think it's very prudent that you find those that can generate its own steady cash flow, because essentially, from my perspective, I don't know if two other panelists will agree, the VC funding has dried up in the last 2 years. So there are those that are raising, but the money is not as readily available now. So I think the basics of the P&L, the cash flow, your distribution, your margins have to be there in order for us to take a look. Yeah. So yeah, we're excited about the food supplement category, but there's a lot of very large companies here, global one, local ones that we work closely, and they're all getting into this space. The clinics of the world, again, there's large money coming in, accessories and clothing, all that. It's exciting, but super crowded as well, thin margin. So it's not easy. Yeah.
So yeah, we heard high affinity to the category, cash flow and the robust business case. Rishika, for you, what's on your checklist? And have you also tightened the purse recently or lately?
So we're a little less imaginative, as you can imagine, because we come in at growth stage. We invest typically $15 to $40 million, and so the company has to be of a certain scale. And what at least I personally believe in is that in chaos comes revenues, in discipline comes profitability, and we're more focused on the latter. We do not believe consumer businesses, and we invest only in consumer. We're not an agnostic fund. We believe that consumer businesses should be profitable at a transaction level. So it's okay if you're losing money because you've got a large team, you've invested in certain fixed costs. However, if you're losing money at a unit economics level, which is when I sell a product to a customer, I don't make a positive contribution margin, that means that the value proposition is yet to be proven out in sort of our worldview of thinking, right? So we like to see businesses that are positive on unit economics. We don't necessarily need businesses to 3x every year. In fact, if you're building a brand or a consumer business, you'd rather grow at 50, 60% every year and build a brand rather than trying to throw money at that problem, because that's not how long-term brands get created. And so our expectation is not that you're a SaaS-like business which is 2xing. It's about, can you grow consistently between 30 and 50%? You're positive on unit economics, and it's just pure scale that will take you to profitability. And I think the third thing that we look at is in any consumer business, right? What are your 4 sort of pillars of potential moats or differentiations? It could be product, manufacturing, distribution, or brand. And so on the spectrum of these, where are you? What is your true differentiation? Do you have a unique moat on distribution which nobody else has? And I think we're increasingly realizing that distribution is becoming more and more democratized, right? You've got marketplaces, quick commerce, your own D2C channel. Offline's hard, but there are still methodologies that you can conquer offline. And so distribution is increasingly becoming less of a moat. And so you're sort of now thinking about product, manufacturing, and brand. And so what is your true underlying right to win based on these is really how we then sort of understand, you know, which business makes sense and which doesn't. And sometimes it's just a first mover advantage, right? Like I was saying, in India, food is so underpenetrated, veterinary services are so underpenetrated, and so maybe you just have a first mover advantage where in 2 years you build scale and then that's that. And so you have no unique differentiation except that you're first to market, which is okay. But these are things, and this is a framework that we usually adopt as we try and differentiate good from great.
Thank you. And let's do one last round of question. And Rishika, I stay with you. Yeah. As an investor, what do you bring to the table beyond capital?
Oh, I love that question. So, you know, our philosophy is actually quite different from most funds. We only make 2 investments a year. We do not invest in companies that exceed 2, even if we like them. And so we always have to be very, very picky. And the reason we only make 2 investments a year and have a very concentrated portfolio is because we want to spend time in value creation through being true, genuine, active partners. So we spend 60% of our time on portfolio management, which, believe it or not, at growth stage, not a lot of funds do. 70% of our team has operating experience. I've been a founder for 7 years myself. So I have been on that side of the table. And the advantage that gives us is that we don't reduce founders to Excel numbers or numbers on an Excel sheet where, hey, you had said you will grow 10% this month and you've grown 7%. What happened? You know, I think we can see beyond that, and we can take a slightly longer term view because we.
Can you talk to my boss?
But I think it's important, right? It's important to be able to empathize that, you know, at the end of the day, like Samir said, you know, an Excel is an Excel, and I can show anything I want to on that, but to roll your sleeves up and go into the market and convince a distributor to put your product on his shelf and display somebody, well, that's not easy, right? And so, you know, the only way you can actually do that and be that empathetic to your founders is if you're spending time with them. I speak to my founders every week. And so we believe that you can do more with less. And, you know, that is a very important philosophy on the basis of which we work. So today, in our view, capital is a commodity. Yes, of course, you know, there are ebbs and flows, and you will have funding environment, winters, and things like that. But fundamentally, for a good startup, there will always be demand. And so, to your point, you know, if you've got a slightly longer-term relationship, like we only invest in companies we've known for a minimum of 12 to 18 months. And in those 12 to 18 months, we do a lot of pro bono work just to build that relationship, right? I mean, we had a company that wanted to expand from India to the Middle East. We identified partners for them, helped them create a joint venture. Eventually, it converted into an equity participation of $25 million. So, and then when we told that founder 18 months later, hey, we've been tracking you outside and we love what you're doing, can you give us the opportunity to invest? He's not going to say no. High probability he won't say no. So I think that is really our sort of modus operandi.
Okay, great. Hubert, what's your modus operandi? And what value do you bring, and why should they have you? Apart from the money, of course.
Yeah, you can ask Athena and Grace when I'm not around. I guess you'll get a very honest
Hush talk.
But to your point, I'm the type of investor who will look through every single cell and every single row, and then I ask Athena and Grace, why not 8%? Why 7%? You know?
Oh, no.
So that's just who I am, and I always tell the founder, please think twice before you take our money, because that's what you're gonna get, right? At least I'm consistent. I think I'm consistent for 5 years, so I think we're gonna we're gonna stay that way. But I think also you'll be quite surprised because I sit on the board of most of our portfolios. We don't do many deals, but we do a few, and we invest multiple rounds. Even for Zumbet, we invested a few rounds. You'll be surprised at a board meeting how many investors show up not reading the materials and not interested or not knowledgeable on what the portfolio is actually doing because they have too many deals or they're too busy or they're too busy fundraising. So I don't want to be like that. I want to come to the meeting. At least what the founders will get is we've already read the material and we go right into the Q&A. Because I think the most precious commodity that we have is time. And I don't like to waste time. So I guess we have built that level of discipline. You'll also be surprised that we don't do quarterly board meetings, we do it monthly. So it's a lot of work for our portfolio founders to prepare the material every month, because you may not see an incredible growth in 30 days, right? So, as you know, as you're the CEO, so, but you still have to have a long-term plan. And what I want to see is, are we tracking to the plan? If we're not tracking, if we're underperforming, why are we underperforming? What can we do? Because I also come from an entrepreneurial background, and sometimes things happen, right? COVID happens, wars happen. Sometimes there's a climate change, then the grain price goes up 4 times. Then what do, right? But at least we need to know and fix the problems together. I'll tell you 2 other interesting stories other than the boring stuff at the board meeting. But I try to do whatever it takes for the founders to get to where they want to be. So there was one time Athena and Grace told me some things I don't understand. They wanted to do some fish test kit. And there's like, well, there's nobody who manufactured this in Singapore. So they asked me to find somebody in Korea. So I went through like 3 degrees of separation to find this guy who's the most well-known PhD in test kit for the fish. And we had to drive down and took the high-speed train for 5 hours, go to this well-known fish village, and then and I was a translator, so I do a lot of free translation for no pay. And then Athena and Grace is like, oh, can we see the actual site? So he's like, okay, come back next day, 8 a.m. And he actually drove the fishing boat for like half an hour, and to actually see all the fish farm that was going on and the actual test kit that's being used. So that's interesting. Also, we were in Thailand together, and they wanted to see some of the Thai pet hospitals, which are quite elaborate. There's one brand that started in one place, and now they operate, I think, 17 locations. Some of them are very large, maybe 5-6 stories tall, and had a lot of specialists. So that was interesting. But we had to go through our clients to find them. So there are a lot of these interesting things. They just throw some homework at me, and some I'll do, some I can't deliver, but we'll try our best. Yeah.
Clear, thank you. And Summer, rolling up your sleeves. How can I imagine you to work with me if I would be a founder?
I'll give you a slight non-answer. All this is wonderful. I'm sure it's all true. Do your diligence. All our founders are on our website. Pick one, call them, and ask them, what was your experience like working with Samir, or with Hari, or with Deepak, or Ant? That's the best diligence. I'm always surprised, by the way, when we're investing in a company, we will diligence the founders in ways you will not even appreciate. I will find out if you've done something you're not proud of in your past life. I will find out, right? And then I'll make my assessment of whether that's the old you or still the same person. I'm shocked at how many founders never bother to find out who their investors are. All of us have been around for a long time. We've been around for 12 years. We've made 89 investments. If you don't find out something about us, it's because you chose not to, right? So rather than me telling you what we do or don't do, not so interesting, far more interesting, go speak to one of our founders. Good, bad, and ugly. I don't know which one you're going to talk to, so we'll see what happens, right? But I strongly encourage you to do that because this is a long-term relationship, right? Your investor is going to be on your cap table for a long time. You should want to find out who they really are. And by that, I don't mean the firm. The firm is a collection of individuals. You're going to have an individual or individuals helping you trying to help you. Find out who they really are, right? So I can't ask you strongly enough to do your own diligence. But generally, you will find most firms are trying to do the right thing, but the individual who's parlaying with you is really what matters, right? And how many files are they on, right? For us, we try to have 5 to 7 files, investments, with one person, no more, because we think it's very hard to do more of that well, right? We don't come as late stage as Rishika, so we don't have the luxury of only 2, but if you have someone who's doing 15 things, assume they're not going to do 15 things very well, right? They're not Elon Musk, right? They're a simple person. So just think about that. Figure out how your investor actually operates. So like what Hubert mentioned, he's like, I'm consistent. I like that. Here's what you're going to get. If you don't like it, no problem. Don't sign up for this, right? Not enough founders find out. What is going to be the reporting cadence? What are your expectations? Is it going to be monthly? Is it going to be quarterly? Are you going to give me a check and tell me Godspeed and best of luck? There are investors who are like that, by the way. I never want to see you, right? Just know what you're signing up for and know the game that you're playing.
Thank you. So, Rishika, Samir, and Hubert, thank you very much for sharing your perspectives and for giving me and us your valuable time.
How do you want to define success? We need to know what the bullseye is first, right? Be profitable. Oh, okay. Yeah, profitable. I'll go first. Profitable is not super complex. We have 89 investments. Of the ones that are active, maybe 64, 65. Half of them are profitable, right? And in our case, profitable at relatively small scale. So I will echo what both folks said here. In consumer, you don't have the same problem as technology where the type of scale you need to be profitable is immense. And that's the game everybody's playing, because it's going to be winner takes all or winner takes most. Our businesses don't tend to function as winner takes all, winner takes most. That means at small scale you can be profitable, if that's the measure of success. The measure of success for a venture investor is not necessarily that, right? For us, it's to make 20 times our money on our winners, right? Over the next 10 to 15 years. We've done that, 5 or 6 times. I suspect we'll do that even more often in the upcoming years. So it is possible, but the hit rates are not very high in venture. I want you to know that, right? So anybody who tells you 8 out of 10 investments can succeed in venture, I completely disagree. 2 out of 10 might succeed.
Yeah, I think, speaking specifically for investments made out of Venturi, so more as a fund and less as an individual, also sort of putting it into context that we come in at a slightly later stage. I would say about 35% of our companies are profitable. 100% of them are unit economics positive. Like I had mentioned, it's a very important metric. Each of these companies is growing at, the sort of lowest growth would be 25%, and that's because that's a chain of schools. So we don't expect them to grow faster. And then the fastest growing company would be about 100%, and the 33% companies that are profitable, like I mentioned, became profitable after our investment. And in fact, 2 of them are going to go public in the next 24 months. So for us, those are all measures of success, right? After we came in, were we able to decisively take them to profitability? Were we able to get them to the public markets successfully? Were we able to build a business model in a way that the public markets will appreciate them? So that's how we measure success, and that's how we've performed against some of those metrics.
Yeah, for us, it's quite interesting because not only we do VC, we're running a multifamily office we started as Korean multifamily office, now Pan-Asian family office. So out of that wealth management business, only 20% goes into VC, and the 80% we put it into what we call more liquid bucket. So it's very incredibly challenging. VC is just tough business. For public equities, we allocate a lot to Tesla right before the US election, and it didn't just matter 1 week, we were up 40%. So I'm just thinking to myself, what am I doing in VC? It's like every day, every month, every quarter, every year, we're like, with our founders, obviously working extremely hard. And also, I think the measure of success changes over time with macro environment during COVID, and even I think this year was all about survival, just survive. So the founders who have put their life into the company can continue to go on to achieve their dreams and vision. May come at a slower pace now, but survive to whatever it takes to turn around the company. And we've spent a lot of time on that this year, last year. But I think the true success for us as a VC, of course, is generate much higher return than the market, and the benchmark should be on the S&P 500 or public equities market. It's very tough right now because there's no IPOs happening, very little M&A activity. So we haven't seen a lot of exits happen. Maybe next year it'll start to change, but we have to generate an outsized return for our investors. Ultimately, it's not my money. If it's my money, I can just stay in it for long term. So that's on the quantitative side. Qualitatively, our lives are short. Why am I doing what I'm doing? I think our tagline at the company is advance the world in a meaningful and scalable way. So we want to do the good things for the world, scalable through technology. So we could, yes, go into online casinos and make a lot of money, but we chose not to do that and want to allocate my money and our clients' money into things that are generally making our lives better. So I think there's some meaning to it, and the fact that we can get involved in these decisions and shaping the culture of the company matters a lot. When we invest in the Apples of the world, I mean, Tim Cook is not going to listen to me, right? So I can't really influence in any way. We can get the capital gains, but yeah, that's a whole different ballgame for VC, I guess. If the founders walk away thinking that we've been helpful to them, good metric would be is that once they have an outsized return, if they put their money with us, I think that will be a good testament to that we have done something right.
Thank you. So we will give other questions then for the break. So I would like to thank you, all of you. And yeah, we can go to the next session. So big round of applause for the
Thank you.